Hey traders, it's Dennis. If this market keeps punching you in the mouth, I'll bet you one thing. You're trying to trade against this trend, and right now this trend is down. Got some great tips today, so let's jump into today's session because I also have 7 stocks, believe it or not, that you want to get onto your watch list because they're holding up better than the rest of the market. The spiders. And what we're seeing is basically a continuation to the downside. I've got a daily chart here on the right-hand side, a weekly chart over there on the left-hand side. And what do we see? We basically are doing another week to the downside. So let's see how many weeks that it's going to be. It's going to be 1, 2, 3, 4, 5, 6th week to the downside. And 7 if you count that little hammer shooting star right there that happened on March 28th. Doesn't seem like March 28th was so long ago, but we have continued to rip to the downside. How far is the S&P away from actually being into a full-blown bear market? Well, we got about a little bit over a percentage and a half, about a percentage and a half to go. We're down 18.34% right now. The other indexes are down further. The one thing that impacts traders day in and day out is trying to trade against the trend. And if you're trying to trade against a trend, basically it is a way just to basically, as a matter of fact, why don't you just write a check, send it to me, and it's doing the same thing as trying to trade against the trend. Is you just open up your checkbook, sign a check out, and sometimes if you're not using stop losses, you're not putting an amount. You're having a blank check that you're sending out there. But look what's going on here. Do we have an entry signal? Do we have a reversal signal in the candlesticks? No. Are we getting some positive signs that we may be approaching capitulation and a potential reversal from there? Yes, we are. We've got the TSI pointed down, approaching a oversold condition. The market forecast, 3-line cluster. And if you're wondering about how to use the 3-line cluster and the market forecast, I do have a video up on the YouTube channel, Market Tech Talk, that talks specifically about that. And if you can't find it, let me know. I may have to do a new video. Same thing. Positive 3-line cluster weekly. But look at this. The MACD, way oversold, but no indication it's ready to shift its momentum yet. So let's move on to the next candidate. The Qs, what are the Qs doing? The Qs is worse than the S&P. Qs have dropped down below. There's the bell, and guess what? We are still down for the day. Really bad, really good rip down to the downside. 326 points on the Dow, 65 points down on the S&P, NASDAQ 378, and the Russell 43 points to the downside. I did go and I did draw a extension off the Fibonacci's from this high to this low, back up to this high. That gives us a projection down to the downside, about 284 on the Qs. And look to your left. What do you see? Yes, that ends into a level of consolidation or congestion over here on the left-hand side. So it could bounce from there. But right now, no reversal signals, no momentum shift to the upside. So if those are our 2 requirements, we're still waiting. And waiting's okay. One of the things to become very comfortable with in this type of market environment is cash is a position, and sometimes the best trade you can make is no trade. So what's going on with the Russell? Russell continues to push down, also approaching. Now, one of the things I want to draw your attention to on the Russell is this is a gap up here. So this is a strong level of past support. And if we get to that, it stops, especially the midsection. So about the 167 level is an extremely strong level of support. As you can see, the indicator's still facing down. This is a good time to draw a line on your TSI. And you just want to draw it across here like this. Look at that. That's great. Now, you will know that we have a momentum shift actually when that trend line is broken to the upside. So we may get a cross, look for a reversal candlestick, which we're not getting right now. And And the crossing, that gives a good indication that, yes, we are breaking back up to the upside. Momentum is on the mend. Are we due a relief rally? Sure we are. I mean, we're, like we said, we are basically 1, 2, 3, 4, 5, 6 weeks down on the NASDAQ, correction, on the Russell. Pop over to the monthlies. What are we looking at? Monthlies. We actually started, the Russell started dumping back in November of last year, and it's gone down 1, 2, 3, 4, 5, 6 months. The downside is approaching that past level of support. That is just about a 50% retracement from this Fibonacci. And I'll show it to you really quick from this high low. That is the, as you can see, that red line right now, that is square dab right on top of a 50% retracement. So that may counteract getting all the way down to this level, or we may overshoot. Similar types situation that we're looking at on this. Am I ready to jump in IWM? No. Am I ready to jump in a downside trade? No. And so it's kind of too late to go short, too early to go long. But with the current condition of the moving averages, I'd be looking for a pullback. Either get down in this area here, bounce. Maybe you get a tradable trade back up to the 8 or the 20. And then once it gets back up to the 8 or the 20, look for a downside trade. Now let's move on to some of the other things of interest, which I think are just have me really intrigued, and I hope it does you also. And the first thing I want to take a look at is there we go. Look at what's going on with the sector ETFs. And as you can see, sector ETFs have finished. Now, there were only 1, 2, 3, 4 sector ETFs that were actually up for the day. However, is that bullish or not bullish? And so the way you do is you just grab and go start running down through these. I encourage you to start looking at this. And again, here's the daily chart over here. Here's the weekly chart on the right-hand side. On the left-hand side, is that a bullish signal? Heavens no! Price action pushed up really high to about $80. And what happened? The sellers came in and pushed it right back down to at or slightly below the 20. So that's on the energy sector. What about XOP? Same. Got back. It is hanging out below the 8 to 20 to 34 and now closed below the 50. And we dropped the 123. We're probably heading down to at least the 115 level. Utilities, same. As you can see, while these were up for the day, this is in no means a bullish chart. Matter of fact, the utilities is a really nice looking bear flag type pattern where here's your flagpole, here's your flag, drops out the bottom of that. We're heading down probably to about the 164 level. LAB, which is the biotech. No, that's materials. As you can see, yes, it's positive for the day, but is that a bullish chart? Heavens no. And it goes that way through everything else. Let's just run down through the rest of them. XLF, that's the financials. And let me slip over here to the. Let's go ahead and slip back over here to the weekly. Yeah, look at that weekly. Starting to roll over. It continues to push further down. One of the things you can do in your educational piece in learning how to trade is when you make a new lower low, don't trade it until that lower low is tested. In other words, don't try to pick the bottom because you'll wind up picking yourself up off the ground and losing money that you don't have to use. Those are self-inflicted wounds. XLP continues to move down. And XLP consumer staples. Looks pretty good on a long-term chart here. It's in an uptrend. However, it is pulling down and it's getting below the past levels. What about XLI? Same. XLV? Same. What is XLV? That is healthcare. Interesting. Approaching a level of strong support or past support. That breaks Watch out below. We're at least 20 points away from the new bottom with that one. XLC, XOB, which is building, home builders. You see, still continuing to push down. XRT, and that is retail, S&P retail. Here I believe is transportation. That is. And one of the old Dow theory type of thing is when the Dow and the transportation start to fall, watch out because we're in for some severe correction. Next one is the diamonds. Diamonds also starting to roll over. And what will oftentimes happen once these start to roll over, you get an acceleration acceleration to the downside. And that's where your capitulation starts coming in. But we can capitulate for quite some time. XLT, IWM. IWM is like we talked about earlier. XBI, this is the biotechs. Biotechs breaking out the bottom of what they have been looking at before. And XLY, which is our consumer discretionary. Now, again, that, I don't know about you, but I don't have a lot of discretionary income to be spending right these days simply because of inflation. There's a spiders and there's a semis. The semis are also breaking out of their level of support. So there are no sectors that are flashing this big, bright buy me sign right now. So that's what we'll leave off with. I'm going to jump back in after we take a look at what we want to be learning this week, and I'm going to cover 1, 2, 3, 4, 5, 6, 7 stocks. But first of all, let's go ahead and take a look at how to practice trading every weekend. One of the things you can do is quite critical is one, practice paper trading your rules. If you need rules, I have the active trend trading rules that I share with anybody who asks. All you got to do is send me an email and sign up for the free, opt into the free active trend trading website, and I'll send you and send me an email. Ask me to send you the rules. I'll send you my rules on one page. It's very simple. There's like 3 rules to get in and about 3 rules to get out. And I tell you, they follow the 6 pillars of active trend traders. What to trade, when and where to enter, when and where to exit, what strategy to use, what to expect, and a mentorship. Second, find a trade simulator. I'll put a link in the description on the YouTube channel of the trade simulators. One of the ones I found that it really looks really excellent is this one here. And I'll put this link over here. And guess what the #1 trade simulator is? It is Thinkorswim by TD Ameritrade, the trading platform that I use. And then next, use the TOS. Use TOS on demand feature. And that comes with your real money account on TOS. It's very easy to get into. I have there is a tutorial on the YouTube channel, Market Tech Talk, that shows you how to use that for both learning how to trade stocks, ETFs, and also a secondary training on how to trade options. Okay, to learn and master a system, it takes at least 100 trades. The thing that's really cool, if you will utilize those practice techniques and those practice tools, you can trade 100 times and not lose any money. How about that? So trade 100 times and not lose, because if you're trading a paper trade account, you can just hit the button and it replenishes your money. Unlike, that's why I never understand why people try to practice with trading real money. If you mess it up, guess what? You can't just push a button and the money comes back. It doesn't work that way. So simulated trades count. Very, very important. And part of the reason for that is probabilities are about big numbers. And so if you trade something 3 or 4 or 5, 6, 10 times, and you have unsuccessful trades with that, you'll have this idea of, it doesn't work. Well, no, you're not going to be able to tell that until you get about 100 trades under your belt, because big numbers have to work out the probability. So next time I'm going to be talking about how long do bear markets last. And I'm going to run really fast through the rest of these entities. These are stocks that are holding up better than the rest of the market right now. Here's new, or that's actually it's new core. Okay, there's the 200-day moving average. Okay, it is holding up above that. Is it selling off? Yes, it is. Could it just blow right through that and head on down? Sure, it could. However, it is still holding up better than the rest of the market. That's one. Lulu, believe it or not, is also holding up better than the rest of the market. Now, it has dropped below the 200-day moving average, which is up here, but it's approaching a level of potential past support where it may rebound from. Again, still hasn't, fallen like the rest of the market. Lulu. Tesla, our buddy Tesla. Now, Tesla is one of those also holding up better than the rest of the market, slightly below its 200-day moving average. Now, this is a huge negative, though, in that it is below the 200. And so we can watch Tesla for a couple of things. One, build a base down here at about the $700 level and move back up. That could just be a nice deep cup type formation to move back up, or moves back up towards the 200-day moving average, maybe the 8 to 20, and then you take a downside trade from there. So Tesla, I want to keep that on my list. And plus, I don't think Tesla is going away. Tesco also, yes, continues to drop, but it's approaching, like the other ones, approaching a level of past support. Now, will this past support hold? We don't know. And I'm not saying buy it when it's down there, because we need basically our 3-step setup routine, which is basically a reversal candlestick along with at support / resistance and a reversal in the momentum and then a trigger off of that. And right now, we don't have any of those. IBM was looking actually pretty good in that it's approaching the 200-day moving average, as you can see. And it may basically bounce from there. Maybe. Doesn't have to, but it could. That could be where it moves back into. When markets get into a weak position like they are currently in, is watch for a lot of range-bound type of price action. And look where things are hanging out. Here's ON. ON is at that level of resistance. It was a gap up here. So that whole window, gap up window, is a strong level of support. So I'm thinking 49.75. Again, do I have a reversal signal? No, not at all. Do I have an oversold condition? No, not at all. So I'll be just continuing to watch that with the anticipation of a potential trade. Again, it's the only thing that I'm putting the caveat on these is they are holding up better than the rest of the market. Same thing on 2. And so as you can see, it is holding at a level of support. And so this is looking at like one of two things. One, a bear flag. Here's the flagpole. Here's the drive sideways. Now, if it drops out the bottom out of it, it's going down. We close back above the 8 and the 20. Look for it to bounce back up. But to where? The limitation is probably back up to the 50, maybe the 200. But we're looking for it to start standing up, a move to, and I'll show that to you right now, and we'll call it a day, is basically we had to move up, down, slightly lower low, lower high. So if we take out that high right there, so this has got to move up and through, be back into a position where it's back in an uptrend, and then we'd be up above that level, pull back, and as long as that pullback stays above this level, that's what we're looking for. Right now, we don't have it. Am I going to get long on any of these? No, not yet. However, they are on the top of my list of just in cases, just in case the market finds traction. But without traction, I'm not doing anything with this market, because guess what? It is as I like to say, it is ugly. And in this particular case, it is dog butt ugly and continues to be so. So I hope you like this review today. Let me know down in the comments. And also, if you like this kind of stuff, just put, let's see, write cha-ching in the comments down on the YouTube channel to say, yep, we're in it. And we're going to hang tight and tough while we're waiting for this market to turn around. So put cha-ching down in the comments. Aloha. God bless everybody.